Hey there. When most people hear the word Iran, they instantly think about nuclear tensions, conflicts, and sanctions. And yes, those things matter. But there's something far more surprising that most people completely miss. Iran should have been rich, not just stable but extremely wealthy. Think about it. This is a country sitting on massive oil and gas reserves, rich minerals, fertile land, and one of the most strategic locations. Add to that millions of young, educated people. On paper, this looks like the perfect formula for a booming superpower economy, but that's not the reality. Instead, the currency keeps collapsing, inflation keeps rising, foreign companies stay away, and ordinary people struggle to protect their savings. So what's really going on? Today, we're breaking it all down, not politics. Just pure economic reality, how a country with so much potential ended up stuck. Let's start with the obvious question. How rich should Iran actually be? Iran's economy is worth around $463 billion. Sounds big, right? But for a country of over 90 million people, that's surprisingly low. It holds one of the largest oil reserves in the world. Its natural gas reserves rank second globally. That alone should generate massive income. Geographically, it's even more powerful. Iran sits right between Europe, Asia, and the Middle East. And more importantly, it controls one of the most critical trade routes in the world, the Strait of Hormuz. Around 20% of the world's oil passes through this narrow path every single day. If that route is disrupted, global oil prices can skyrocket overnight. So imagine this, a country rich in energy, perfectly located and full of human talent. Everything points to success. And yet, it's struggling. Why? Because the problem isn't just resources. It's the system running the economy. A large part of Iran's economy is dominated by powerful organizations that don't follow standard market rules. One major example is the banyads. These are massive foundations that started as charities, originally meant to help the poor and war veterans. But over time, many of them transformed into giant business empires. Today, they control everything from factories to farms to hotels. They don't pay taxes. They don't publish financial reports. And they operate with government support. If you're a regular entrepreneur, you're not competing on a level playing field. You're competing against institutions that already control the system. Despite their size, many of these organizations are inefficient, but they employ millions of people. This creates a dangerous cycle. They can't easily be reformed because too many livelihoods depend on them. Now add another layer, subsidies. Iran spends billions every year to keep essentials affordable. While this helps people survive, it puts massive pressure on the government's budget. When the government tried to reduce these subsidies, it triggered widespread protests. So again, the system stays locked in place. Now let's talk about the biggest external pressure. Sanctions. For decades, Iran has faced heavy economic restrictions from global powers. These sanctions limit its ability to sell oil, access international banking, import advanced technology, and attract foreign investment. In simple terms, Iran is cut off from the global economy. And that changes everything. Oil is the backbone of Iran's economy. When sanctions restrict oil sales, the entire system takes a hit. To survive, Iran has turned to alternative methods, selling oil through indirect channels, relying on middlemen, and operating in the black market. But this comes at a cost. Transactions become slower, more expensive, and less efficient. Goods arrive late and overpriced. At the same time, foreign investors stay away. No company wants to enter a market where trade is uncertain. This isolation forces Iran to rely on itself. And while that sounds strong, it also limits growth and innovation. Now here's where things get even more intense: the currency. Over the past decade, Iran's currency has lost more than 90% of its value. What used to cost 30,000 now costs hundreds of thousands. This isn't just numbers. This directly impacts everyday life. Why does this happen? Because when revenue drops and expenses stay high, the government often prints more money. But printing more money without increasing production leads to inflation. And once inflation starts rising fast, it's hard to control. So what do people do? They try to escape the currency. They buy dollars, gold, property, even cryptocurrencies. Not to get rich, but just to protect what they already have. That's why Iran's stock market has seen rapid growth at times. And then comes another major factor: geopolitics. Iran spends billions beyond its borders to maintain influence in the region. From a political perspective, this may be seen as necessary. But economically, it raises a serious question. What if that money was invested inside? The opportunity cost is massive. And while all this is happening, something else is quietly draining the economy. Brain drain. Many educated Iranians are leaving for better opportunities. When talent leaves, long-term growth becomes even harder. When you put everything together, the picture becomes clear. Iran has everything it needs to succeed: resources, location, and talent. But internal inefficiencies, sanctions, and geopolitical priorities have held it back. The economy survives, but growth remains limited. What would Iran look like if it wasn't cut off from the world? Would it become a powerhouse? Or will it continue on the same path? Let me know what you think. If you want more deep explanations like this, make sure to like, subscribe, and follow Expound 100.